Hello traders, today we want to talk about free Elliott wave and Fibonacci strategies. Free Elliott wave and Fibonacci strategies. We are on a monthly chart of Sterry Cycle Incorporation. The AP is SRCL. Sierra Romeo Charlie Lima. And we want to talk about free Elliott wave and Fibonacci strategies. All right. So using the reference point of 2009, as you can see here, the S&P 500 has started a bullish trend. At the same time, like the Sterry Cycle Incorporation has also started a bullish trend. So you can see that before that, we have this bullish progression followed by a tiny correction, a very shallow correction. A very tiny correction. This is a very bullish stock. So bullish trend followed by a very shallow correction, and then we see a new trend that is starting at this point in time. At the same time, when the S&P 500 is also starting a bullish trend in 2009. So if we label this one first wave, well, let's see what we can do. All right, first wave, and this one the second Elliott wave. And this one is the third Elliott wave. Feel free to disagree with my wave count. That's okay. And I will say to you, this is my wave count. This is the fourth Elliott wave, followed by the fifth Elliott wave. All right? Right there. Okay? So normally some traders, you need to understand this because so you see here, this is the trending first, corrective first. Now a new trending first has begun. Now a new correction is also beginning. Because I'm on a monthly chart, when I'm looking at this trending first plus correction, this is an Elliott wave cycle on the monthly chart. That Elliott wave cycle will be a mini cycle on the higher time frame, for instance, on the yearly chart. I don't want to go into a deeper wave count, but I want to talk about a free Elliott wave and Fibonacci trading strategy here that one can apply. So then we start counting the first wave, which is this one here. I'm going to color it now into green. All right, and the second wave I'll color it into red. The third Elliott wave I'll color it into orange. There is no Elliott wave violation here, which is good. All right, we want to check that carefully. And then the fourth wave, which I always color into pink, and then the fifth Elliott wave. All right, I want to highlight something very important for traders. Is this that you see that I will start counting my first wave here. All right, I did it at this point here. But some traders will also, some conservative traders will start counting their first wave from the top of the prior trend. So this is the top of the prior trend. You see this horizontal line here. So some traders, conservative traders, will count their wave like this. Will say this is the first wave from here to here. All right, something like that. In fact, you see this candle that pierces through. Put it here. Say first wave. So pierce through and continue. So some trader, conservative trader, will say this is the first wave, and they will say this is not. They will not count their first wave from here, but they will count it from the candlestick that breaks above the high of the first wave. Understand that? So because when we are counting Elliott wave, we need to try to go into the minds of other traders. All right, because traders use different strategies, different Elliott wave strategies, and we want to be aware of what they are thinking, so we don't get into trouble. All right, very important. So because we are not alone in the financial market, we need to always pay attention to other market participants and try to go into their mind to know what they can do. All right, so you can see that if I apply, for instance, here it is. If I apply Fibonacci extension, to this wave count, so this one, like other traders are doing. My first wave is starting from here, but I'm applying a Fibonacci extension to this one that other trader may call the first wave. All right, here it is. Put it exactly here. All right, you can see that the third Elliott wave, the orange section here, that's the third area wave, has stopped at 161.8% Fibonacci extension level of this first wave. So if you count it like this, you call this one from here to here as the first wave, you will say that the third area wave has ended exactly at 161.8% Fibonacci extension level of the first wave. I have not finished yet. What I'm about to reveal to you today is a powerful free area wave and Fibonacci trading strategy, and we'll get there soon. This is about how to use the upside down, repeat, the upside down Fibonacci extension level, to trade the corrective phase. All right, so I haven't started yet. So what I'm doing here, I'm trying to go into the minds of other traders to see what's going through their mind. Those traders will also, because the third area wave did not go above the 161.8% Fibonacci extension level of the first wave, they will be expecting what we call equalities between the first wave and the fifth wave. So here it is. So if I use the length of the first wave and I project it at the fifth wave, you can see that there's almost equality between the length of the first wave and the first wave, because the third area wave is not extended. We have a normal third area wave. All right, now correction. Normally, if the third area wave, repeat, correction, if the third area wave is extended, we usually have equality between the first and the fifth wave. That's the area wave principle, if the third area wave is extended. But in this case, what we are looking at, you can see that though the third area wave is not extended, for traders that are calling this the first wave, still they are using the equality rules between the first and the fifth wave. Remember that when we say that if the third area wave is extended, there is equality between the first and the fifth wave. This is to say that there is a high probability that there may be a equality between the first and the fifth wave. It's not guaranteed that because the third area wave is extended, definitely there will be equality. It just means that there is a high chance that if the third area wave is extended, there will be equality. All right, just understand that it's a high probability situation. All right, here, though the third area wave is not extended, there is equality between the first and the fifth wave, talking about the length. If we use the amplitude of the first wave for those traders that are calling this first wave, and they project it at the end of the fifth wave, again you can see that they are talking about the equality is still in the same zone of $146.52 equality, where the fifth wave has ended. I'm just pointing this out. But let's go back to my first area wave. All right, now this is my first area wave from here all the way up here. All right, because how do I know? Because of how the S&P 500 behave. I will have a level. So if I did see, if you see there is a bit of pullback here, you see here, normally what we will expect is, you see here, it came down. You see, it came down like this a bit. All right, pay attention to what I'm about to say to you. A bit up like this. And then it came down like this. This is the corrective phase, ABC correction. All right, a tiny ABC correction. Now, normally, it's not very clear to me. I would prefer something like this again. 1, 2, all right, 3 up. In that case, if I see clearly that this, that we have an inverted head and shoulder chart pattern here, I will have start counting my first wave from here, instead of here. All right, but it's not very, the pullback is not significant as such, though there is a little bit of a pullback. That's why I decided, remember, this is the challenge that we face when we are counting wave. We will make decisions, looking at the price. That's why I decided to call all this the first wave. But I understand that normally we want to see 1, 2, 3, 1, 2, 3. Okay, 1, 2, 3. And we will start counting the first area wave from here. But it doesn't matter. That's why I say to you, sometimes you may see a bit of difference between the wave count of many traders. So if I use this length of my first wave and I project it here, it's almost equality. You can see that that's why the price went. You see the tail. So you want to know what is happening here. See those traders that are calling equality right here. Though the third area wave is not extended. Normally, the equality rule will apply when the third area wave is extended. But here we are, the third area wave is not extended, but there is equality between, depending on how you count your first wave, equality between the first and the fifth wave. But going back to my original first wave that is starting right here from the bottom of this move in 2009, if you use this measuring stick, you will see that there is no equality between the first and the fifth wave, which is making more sense because the third area wave is not extended. If I use again the amplitude or the magnitude of the first wave from the high to the low of my first wave, which is starting from here all the way up here, you will see that there is no equality between my first wave and the fifth wave. So whenever you are counting wave, you want to do this kind of exercise, going into the mind of other traders to see what is happening. All right. Now let's go back to our main topic about a free Fibonacci, free Elliott wave, and Fibonacci strategy. All right, so you remember what we were doing before, so we're going to go back again to the first wave, and we're going to use the Elliott wave extensions. All right, hold on please, traders. So I'm going to stick to my first wave like this. And usually, at the beginning of the wave count, all right, area wave analysis, once we see the first and the second wave, we usually apply Fibonacci extension to the first wave. You remember? And by doing that, this is the strategy that I'm talking about. When we we apply the Fibonacci extension to the first wave, you remember we usually highlight which level? The 161.8% Fibonacci extension level of the first wave, which is right here. You see here, 161.8%, and we will expect that a normal third area wave, all right, will stop here. You can see that by applying the Fibonacci extension to my first wave, we can see that the third area wave has ended exactly at 161.8% Fibonacci extension level. But if I apply the Fibonacci extension to the first wave of other traders that are very conservative by counting their first wave from here, in fact from here, you can see the 161.8% applied to that first wave. It's also quite close. You see here, you see it here, 161.8% right here, but the price went a little bit above it to the level of $126.04. If I apply it to this session, if I call the first wave, if I start counting my first wave from here and apply the Fibonacci extension, the 161.8%, you see exactly again at $126.04 level. That's where the third area wave has ended. But this is what we usually do. We highlight, so after we have identified the first and the second wave, we apply Fibonacci extensions to the first wave, and we highlight which levels? All right, 161.8%, the 214%. Look at that, look at that. Look at that, that's beautiful, isn't it? Pay attention to the pink line on my chart. 214%. Look at how the price stopped there. Boom. On the dot. Powerful stuff, Remember to do that. Whenever you identify the first and the second wave, apply the Fibonacci extension to the first wave and highlight the 161.8%, the 214%, and the 314% Fibonacci extension level, and the 414% Fibonacci extension level. We do not have room to draw the 414% Fibonacci extension level to this chart. So the only level that we can see now is the 314% Fibonacci extension level. But my recommendation is that if you can, if there is a room, draw all those 4 key level, 161.8%, 214% Fibonacci extension, 314%, and 414% Fibonacci extension level of the first wave. This will help us to improve our Elliott wave analysis. By the way, today I recorded a video, a very important video that I titled How to Improve Elliott Wave Analysis with Fibonacci Extension. Please watch the full length of that tutorial. So in that tutorial, I was telling traders that when we have identified the fifth wave, we can apply the Fibonacci extension upside down to the fifth wave, and we want to highlight the 161.8%, the 214%, the 314%, and the 414% Fibonacci extension level. But in this case, we are applying the Fibonacci extension upside down to the fifth wave. Now let me explain that to you. This is the topic that we are discussing today: free Elliott wave and Fibonacci strategy. The reason why I call it free is because normally I should charge you for it. All right, so it is free because it's one of my trading tool that I want to give to traders for free. All right, so that's why I'm calling it free, because normally I should be charging you right now or ask YouTube to charge you guys, but because we are friends, I give it to you for free. So let me explain myself. Fibonacci extension upside down. What do I mean? Okay, so you see here we count first wave, second wave, third wave, fourth wave, and the fifth wave. What am I talking about? Talking about upside down Fibonacci extension applied to the fifth wave. So normally, okay, in normal condition, when we apply Fibonacci extension to a bullish fifth wave, we will draw the line like this. Yes or no? Oops. I move one line, okay, somewhere there. So we will draw it like this, yes or no, from the top to the low. And the Fibonacci extension will be above the high of the fifth wave. Yes or no? So talking about Fibonacci extensions to the fifth wave, they are above the high of the fifth wave because it's a bullish fifth wave. All right? But when I'm talking about upside down, okay, Fibonacci extension applied to the fifth wave, what we want to do, we don't want the Fibonacci extensions to be above the high of the first wave. So we will turn it upside down because we want those lines that are above the high to be somewhere down here because we want to use them to trade the corrective phase. It's in fact the inverse of what we were doing during the first wave. So during the first wave, we just apply it to the first wave, not upside down, repeat, not upside down in a normal way, and then we highlight the 161.8%, 214, 314, 414. But when we want to apply it to the fifth wave, in order to trade the corrective phase, we need to apply the Fibonacci extension to the fifth wave upside down. So what I've done so far, I applied the Fibonacci extension in a normal way. As you can see that the extension are above the high of the first wave. So now what I'm going to do, because that's not what I want to do, I need them to be below. I want to trade the corrective phase because now I see first wave, second wave, third wave, fourth wave, fifth wave. Now by applying the Fibonacci extension upside down to the fifth wave, I'm using those key level, Fibonacci extension key level, to trade the corrective phase. Okay, so now, let me show you how we do it. So we will do it. So when we want to apply Fibonacci extension upside down, we started from the beginning of the fifth wave to the top of the fifth wave. Here it is. You see, as I'm doing that now, you can see that my Fibonacci extensions applied upside down, okay, to the fifth wave, all right, is now below here. Can you see them? So, as we have done during the first wave, now we want to highlight which level? You want to highlight again the 161.8% level. This is to trade, all right, the corrective phase upside down, apply to the, we want it to be correct, okay? So this 161.8% Fibonacci extension level upside down to the fifth wave. Here it is. And we want to highlight also the 214% level. All right. So I'm going to color them now into orange because a correction has begun and we are applying Fibonacci extension upside down to the fifth wave to help us trade the corrective phase. And we will highlight also the 314% Fibonacci extension upside down applied to the fifth wave. And if we have rooms, we can also highlight the 414% Fibonacci extension upside down for the fifth wave. But now we have no room anymore. So here we stop here. So those are the key levels that we want to watch as we apply it to the Fibonacci extension. One more thing, my friend. One more thing, my friend. As you can see, I apply it from the low of the fifth wave to the top of the fifth wave. But as we have done here at the beginning of the wave count here, you see, I was showing you how other traders may label their first wave, how I would have done it if we have 1, 2, 3, 1, 2, 3, and we were going into the mind of other traders during the first wave, all right, you understand? Before we apply the Fibonacci extension. Again, in the fifth wave, you will do exactly the same thing. You will try again to go into the mind of other traders. So right now, as I put it like this, from the low to the top, you can see that the price now, okay, a little bit below the 161.8% Fibonacci extension level, upside down to the fifth wave. That's where we are now. Those are the level where we want to watch as the price going down. The correction is underway. But do not forget the structure of the price. So price going down, as an alien wave trader, you are checking the price structure to know what's going on. But you want to watch also the 161.8%, the 214%, and the 314%, even the 414% Fibonacci extension upside down apply to the fifth wave. Remember that the professional will always trade around key level. Now, talking about going into the mind of other traders, some traders do not put their Fibonacci extension like this. They will not put it all the way to the top. So they will put it instead to the closing price. So you want to do that also. So by doing that, so now I'll put it to the closing price here. I didn't go all the way to the top. What we are doing now, we are trying to go into the mind of other Fibonacci traders, how they put their Fibonacci extension on their chart. So by applying like this, our 161.8% is now here, right here. You see, it's here now. All right. Okay. So price came down 1, 2, 3, boom, near the 161.8% level. Okay. So you want to do that exercise. Try to go into the mind of other traders, and you want to. Okay. The reason why you need to do that, you want to see what is going on, and also you can make excellent. Okay. Trading decision. So by doing it like this, by placing my Fibonacci extension here instead of the top of the fifth wave like this, all right, you can see that the price came down to 161. This is 161. That's the line here at $87.79. So price came down 1, 2, 3 down near that $87.79. Bounce up to retest the low of the fourth wave. So this is good to know. Bounce, reach this level. Retest the low, so break below the low of the fourth wave and retest it. Now it's going back down. By adjusting my Fibonacci extension like this, you can see now that we are now, where are we now? The price is now at 214% Fibonacci extension level. Now, can you see that it makes sense to go a little bit into the mind of other traders so you may know exactly what's going through the mind of other traders? If I did not change a little bit my Fibonacci extension, I may not know what other traders are thinking. It's very important to know what other traders are thinking. Some traders are expecting, okay, a bit of bounce at this level of $69.68. So at this point in time, all we can see to trader, priority to bullish signal above $69.68 if one is trading steady cycle incorporation. a prior to bearish signal below the 69, 68 level because it's a key Fibonacci extension level, 214%. Okay, the upside down Fibonacci extension, all right, applied to the fifth wave. But in this case, you can see that we adjust our line going to the mind of other traders instead of moving all the way to the top of the fifth wave as I did at the beginning of my my discussion about the fifth wave. You can see that by adjusting it and going to the mind of other traders, it's making a little bit more sense why the price is behaving as it did, and it's now at at 214% Fibonacci extension levels. All right, and our 314% is now here, which is so you want to put it there, and the 414% is right here. Okay, I'm going to color it also into, all right, into orange. So by going to the mind of other trader, you want to see, okay, what is making more sense? What is more useful to me as a day trader, as a swing trader, as a position trader? I think by applying a Fibonacci extension like this, upside down to the fifth wave, remember it's upside down to the fifth wave like this, like other traders are doing, instead of placing it all the way to the top, it makes more sense because the price is acknowledging, okay, those are Fibonacci key level 1, 2, 3 at 161.8% level, rally up, retest the low of the fourth wave, boom down. Now we are now at 214% level, really rally up to retest the $87.79 before going down, or is the end of the correction. All right, so this is how we can apply, okay, the Fibonacci extension upside down to the fifth wave, and we want to highlight the 161.8%, 214%, 314%, 414% Fibonacci extension upside down of the fifth wave. As we have been talking about this, remember something else that we have discussed before. Okay, don't forget everything. So the key levels that we must watch, you see, $87.79. We are now at $69.68. Be aware of this support level. And we have $34.82. And the 414% level is almost near the zero level, $1.33. If you are trading this stock, you need to pay attention. With those lines, those lines can help us to improve our corrective wave trading. So here, correction came down. Okay, retest the low of the first wave, of the fourth wave, bounce up, stop at the high of the third area wave. So see, break below the high. So price break below the high of the third wave. This is what we are talking about. Break below, retest the high of the third wave. Push down. All right. Are you getting it now? Straight away to 161.8% Fibonacci extension upside down, apply to the fifth wave. It bounced up now to retest the low of the fourth wave. This is another bearish trading setup. Implement a top-down trading method, push down, 214% Fibonacci extension level, upside down, apply to the fifth wave. Remember that we are using this level, 141.61 as the top of the fifth wave instead of 152.52. Okay, remember what we have done, okay? And now we are now here, okay? With those Fibonacci extension levels, we will be able to pinpoint the best place to trade the corrective phase. One more thing. What we have said before, after a bullish trend like this, okay, there are other key levels that we want to know. So what I've shown you now, this is the main topic today, free Elliott wave and Fibonacci strategies, okay? So now remember that after the end of the fifth wave, we also apply Fibonacci retracement. And a lot of traders will watch the level between the 50% and the 61.8% Fibonacci retracement level. That's the zone here. Right? The price now below it. That's what we call the sweet spot zone. But if I move my Fibonacci retracement down, going to the mind of other traders, instead of putting it here, I'm moving down to the closing price. That level of between the 50%, 61.8% level is again right here, somewhere here. The price is below the sweet spot Fibonacci retracement zone. All right. So whenever you count 1, 2, 3, 4, 5 wave, apply the Fibonacci extension upside down to the fifth wave and highlight the 161.8%, 214%, 314%, 414% Fibonacci extension level. Those key Fibonacci level will help you to improve the corrective wave trading, the corrective phase, to allow you to make excellent decisions during the corrective phase of the Elliott wave cycle. Alright, this is the end of this tutorial. If you have any question or suggestion or comment, alright, do not hesitate to put in the comment section, and in due course I will be recording another video to answer your specific question. We are the TSTWSYS008 traders talking about free Elliott wave Fibonacci strategies. Happy trading to you all, and speak to you soon.